Welcome to the Fitness and Finance Podcast with Jeff Smith from The Retirement Smith and Jennifer Scherer from Fredericksburg Fitness Studio. True wealth isn't just about finances. It's about maintaining a healthy body and a secure financial future. The Fitness and Finance Podcast is here to help you build strength in both areas, tackling financial strategies for retirement while also discussing ways to stay active, healthy, and energized. Now let's get started with fitness and finance.
Man,
all right.
Our headsets, you know what I mean? Like you get the bass in the headset, so
the music was really thumping. I thought it was great. Yeah,
well done, Justin.
We're still getting excited by the video, and thank you, yes, to Justin. He's great, the videographer that took care of that for you.
Great. I saw him. We saw him at Summit too. He was like, he took care of us. He got awesome pictures for us, and he's great.
Yeah. He is fantastic. One of the best guys. Love working with him. And you guys are awesome. Hey, I want to welcome our viewers and listeners to Fitness and Finance Radio. I'm your co-host, Tony Shore. I'm just along for the ride. Leading the way, as always, is Jennifer Scherer and the lovely and talented Jeff Smith.
Right.
Jeffrey Smith. Now, we were all together recently at a huge financial conference. Over 500 of the top financial advisors from around the country. And Jennifer got to tag along with Jeff to this financial conference.
Yes.
But there was some fitness related activities involved. I know they have I don't know if you guys utilized it, but it is one of the top rated spas in the US. They have a really nice spa.
Amazing.
It was very nice.
And it's right on the edge of Camelback Mountain.
Oh, yeah.
And there's trails that you can hike up. Double Black Diamond Trail. I even attempted it. I didn't make it all the way up. Did you guys make it all the way up?
We did.
Oh, yeah. Yeah.
With a couple injuries along the way.
Yes.
Yeah.
Oh, yeah. You heard
there was some bloodshed.
There was definitely
a little
some
bit
blood.
Of blood. There was a little bit of blood.
Jen hurt her your shin, right?
Well, there's parts on the way down that you literally had to scoot on your bum.
Three points of contact.
Yeah, I kept telling Jeff three points of contact. But on one of those areas, it was real tight between two narrow rocks, and my shin caught the rock on the way down. And so I had a little bit of blood. Jeff got a little bit of blood from a head bump.
Yeah, I was climbing underneath a rock, and I went up too fast, and it just scraped along the top of my head. It looked really cool for a while.
You're not used to having to worry about hitting the top of your head, Jeff. That had to feel pretty kind of proud. Like,
I know.
Hey, I was tall enough in this situation to actually bump the top of my head.
He just goes straight to the short jokes.
I know.
Man. Well,
remember that old Randy Newman song, Short People Got No, what was it? Short People Got No Reason. Anyway, I'll cue that up for our next episode. I'm kidding. Speaking of short people, at this financial conference of 500 of the top financial advisors from around the country, including, of course, Jeffrey Smith, we saw some great speakers. Danica Patrick, the female race car driver, was there.
Yes.
And you've got some height on her, Jeff. I think.
Yeah, I do.
Yeah.
Well, just like Danica, I always finish in the top 25. So.
Yeah.
There you go. That's awesome.
Yes, Danica was great. She was funny and engaging, and she had a lot of good things to say. She's a strong entrepreneur, and she's an idea person, which I think is really cool.
Yeah.
But she was so gracious. She spent some time with us, and we got a great picture with her.
Nice.
And I told her that I wanted to be part of her driving school. I love her. She has this concept that she wants to teach people how to drive, and not just, to pass the exam, but to bring, common sense back to the roadway. And I'm like, I am all for that, because whenever I get
good luck with that.
I'm like, I want to sign that person up. I think I want to find a way like we can intercommunicate within cars and be like, look, you need to go to Danica and get some real work. I mean, you need some work done.
Yeah, you need to be able to send a message to their in-dash screen in their car
that
says you need to be able to recommend ads that show up on different people's screens. So when she goes to park, on her screen is like Danica Patrick's driving school.
Yes. Well, that meme with Fred Armisen where it's like go to jail. You would go directly to jail. You go to that meme, like I think we should just have him say, "You're going to Danica Patrick's school." Danica Patrick.
You're going directly to Danica
Anytime they
Patrick
do something,
School.
go directly there.
I love it.
Yes, we need that.
And the maps in the car, the electronic maps in the car automatically route her to the nearest location for the Danica Patrick
We
driving
need
school.
that. We definitely need that.
Him or her.
Yes.
I didn't mean to assume it was a female driver.
Yeah,
That
did you really? Did you say
oh, did I?
He did.
And Jennifer,
No.
he did.
Jennifer
I will
is one of
pay
the
for
best-
that later. Holy
She's one of the best
shit.
drivers I've ever seen.
Yeah.
And
My
you
wife's
know
a
what?
much better
She
driver.
can parallel park like nobody's business.
I pride myself. And my wife and kids are always amazed. They're like, "Oh, I don't know if you'll be able to." I just, whoop.
Yeah.
Yeah,
How did you-
Jennifer. I mean, I'm good at parallel parking, but you know, it was one of the reasons why I proposed to her is because it was amazing. I saw her do it, and I was like, "You instantly got hotter."
Yeah, this whole time we've been wondering what the main catalyst is. Why did you ask this? Why would you marry Jennifer? You know, that's a question I'm sure a lot of people ask
Yeah,
of Jeff.
yeah,
Right.
right.
And it's because of her parallel parking.
Well, that would
now
be-
we know.
Yeah, that's reason. 375,000.
Oh, you're sweet.
But it's amazing.
Well, let's
Yeah.
talk about the fact that Jeff was on Fox 5 this morning.
Oh yeah.
Oh,
Well,
yes. What were you
Yeah.
talking about? Jeff, once again, they invited you back. That's
Yeah, I know. I
key.
can't believe that they actually like my advice. So
I like that. What did you talk about?
we talked about risk tolerance, and I think it's a really good topic for today too. I think as we get into the new year, we had a lot of stuff happen this past year, and the market was still up, and it still continues to go up. But I think where we're at, we really need to pay attention to our personal risk tolerance, and that's kind of what I talked about. Is that we, for an easy to complete and find out information on it, the Comra is a really good way. It's not, I have a deeper and more in-depth risk analysis that I use with people, but just to get a score of where they are and get an idea, we use the Comra, and that's the color of money risk analysis, and it's 11 questions, and ultimately it'll identify 3 areas that we would want to allocate money to based on the responses. So there's green money, yellow money, and red money. So pretty basic, but it's very, very effective as far as how we talk about allocation.
Well, I think that's a great way to simplify a confusing process for people, make it easy to understand. Green is safe money or principal protected money. Yellow is actively managed money, but there's still some risk. And I assume red is where your money is at risk. You can, it can go down. The value can go down in red money and can go up. But when you talk about personal risk tolerance from a financial standpoint, Jeff, and you talk about this risk analysis, why? What do you mean personal risk tolerance? So everybody's different. Everybody has, some people can't handle any loss to their savings, and some people can handle more or need to be able to handle more. Is that what you're saying?
Exactly. So I think the thing is that why it's important in individual is just because somebody says this is how you should be allocated or this is how you should be, doesn't mean you are. And I don't think I think, much like Jennifer has to take the stigma off of what kinds of foods are good and bad. Risk is neither good or bad, right? You don't have to have this mindset that, being aggressive is good and being, conservative is bad, or vice versa, right? I mean, I think that's the key is whatever you are is you. That's you. You don't have to borrow somebody else's risk tolerance because ultimately it's going to make you miserable. If you're not in the right place. Imagine if you're riskier than than you're allocated and you're missing out on upside potential, right? That's got to be very frustrating. And conversely, if you're losing money, you're going to be more apt to sell if your true risk tolerance is not that aggressive. So I'll give you an example, right? I have a client that has about 1.5 million in assets with me, and about 1.45 is principally protected. So
wow,
right. So
conservative.
very, very conservative. And of the $50,000 that was exposed to the market, that was allocated in fairly safe environments. I'll put it in perspective.
So not a ton of growth or compounding interest opportunity there.
But they had earned it and worked for it. They didn't want to lose it. So again, this is not a judgment. So this is who they are, and they're afraid of the market. And so I'm taking you back to March, when COVID hit. A couple weeks after COVID hit, we had this massive decline in the market. And so much so that I did a full webinar for every single client, and we walked through the process. And the nice thing was we had some really good safety measures in place. We were already in cash in a lot of our models, but not a single person called me except for that person. And I'll just say this: the average person,
because you had a plan in place to deal with these ups and downs, and they knew they would happen, and so they don't have to worry about market volatility because their plan was in place. That's why you didn't get calls.
Yes, and I'll just say this: the average investor lost 40% in that time period. Now it's all been back, right? It's all back, and it
didn't take too long for it to not only come back, but the market hit record highs, and we've had an amazing streak of 3 years of record highs right now.
Right. And just to finish the story, they I won't get into specifics, but it was a significant portion of that was the worst loss in our book. So it wasn't any remotely close to that, but this person in particular lost less than 3% during that time period. So
wow.
So here's the thing: this is really where I'm going with this. When you have the allocation correct, you're not literally at risk in the market for that whole exposure, right? So if you have $1 million and $900,000 is in safe money or green money, and 10% is in yellow money or red money, you only have a 10% exposure to any risk. So when you understand that as a whole, and not just that bucket, has unlimited risk. There is no unlimited risk when you have that kind of allocation. So what we can achieve through the risk analysis is a proper allocation where you should be at any given time.
A proper balance.
Yeah, to avoid any uncomfortable situations for yourself.
Which is why before you do anything or help your clients decide on where their money should be at, you have them take that personal risk tolerance, risk analysis, I should say, the color of money risk analysis, and your own more in-depth one to show, okay, here's where you're at personally. Then you take and run reports on where they're at when they come to you and say, okay, your risk tolerance says you're very conservative. Don't really want to deal with any losses, but all your money is in the market.
I see it all the time.
Yeah, that happens. And that's where you come in and say, let's fix this. Let's bring it into balance. And I think that's great. Now, can we tie this, Jennifer, into
fitness and nutrition for sure?
Fitness and nutrition, yeah.
Yeah, so I think fitness mirrors this perfectly. Like your body has a risk tolerance as you age. Like when you're younger, I think your body has more margin for error, and you fall, you might bounce right back up, or you get an injury and you can rehab.
I can eat that entire pizza in a sitting when I'm 20 years old.
Yeah, exactly.
Not so much when I'm 60.
No, and I see it, with seniors. They have a fall and it becomes a financial event. They physical therapy and loss of independence and all of it. But I think we should be doing the same thing. Like, so Jeff's, segment on Fox 5 labeled red, yellow, and green. And I would think of it in fitness terms, like green movement would be low risk, real high value. So that would be things like balance training.
Yeah.
And, Pilates, like slow, steady strength training, like with good control, stretching, mobility work, even learning how to fall safely. Which people are like, what? But I think green money would be like your foundational moves, like your stability and control moves. Yeah. And then, yellow would be moderate risk. So here's where you get into think about heavier strength training. You're starting to add weight. Maybe you're working on speed, like a little bit quicker transitions where it's, time under tension. Maybe you add in some uneven surfaces. You start standing on a Bosu ball for balance work instead of just practicing single leg stand. And I think just like in finance, like yellow movement would build capacity, but only if your green is solid.
Mm-hmm.
Right.
And then I think about high risk. Like I see injuries happen all the time when they go max 1 rep lifts and they haven't built their foundation. And and here's the thing. I don't think that's inherently bad. I'm not saying doing 1 rep max movements are inherently bad, but if you don't have the green and the yellow moves, you're gambling with your body.
Interesting. Yeah, I never thought of it from a physical exercise or workout or routine standpoint, like you've pointed out. I was thinking more on the diet side where, your diet, you can definitely, it's easy to see where you can take risks with a diet. Obviously, if you're just pounding sweets every day, or you open up that Haagen-Dazs package and you clean it out to the bottom in one sitting. You're taking some health risks by eating that way, or drinking too much. You love diet soda, so you have 6 Diet Cokes a day. That's a huge risk.
Yeah, and I think the red, if you label food as red, right, it isn't inherently bad, but I think when you overexpose yourself, then it becomes expensive.
Yeah. Well, think about the risk when we did Camelback, right? I mean, the risk of fall there is pretty enormous, actually. I mean, you're
especially on the way down. I think on the way down, it's more dangerous than going up. I had to go way slower than I actually went slower going down than I did going up. And I saw a lot of people going faster than they were going up. Going up, they weren't so sure what was going on, so they took their time and they wanted to make sure they could reach the top. Going down, they thought, oh, skip, jump, slide, let's go. And I was worried. I know at my age and my shape, hey, I could easily twist an ankle or break something up here. So every step and move was deliberate on the way down, even more so than on the way up.
Yeah, exactly.
I really took my time going down because I didn't want to twist an ankle. I didn't want an injury. Right.
And I think that's why, I mean, these are activities that we want to do. You know what I mean? And so, and as we age, we have to be very cautious that we don't have a long, drawn out injury because our mechanical, positioning is wrong. Our proprioception is off. You know what I mean? Those things, those are big words, but proprioception is something you can train for. And just having body awareness in space is so valuable, and we don't do it enough, right, Jen?
No. And I want to tie this back to a client who's dealing with an injury right now. And it's really mentally challenging for her because being pushed to that point was starting to become a sense of accomplishment where she was getting a high out of it, like was becoming part of her identity to overcome a really challenging workout. And then she got this injury and she's struggling psychologically with like, man, I just don't get that same dopamine hit anymore.
Sure.
And I feel like I'm being a sissy by just slowing down and doing these controlled movements. And they continue to chase this intensity mindset instead of resilience. And I'm like, wait a second, if you use this opportunity to really focus on technique, let's slow down and get this right.
So good.
And
like Ricky Bobby in Talladega Nights, just as an example. He got in an accident. He was always taking it to the max, and that's what his dad did, always pushing it to the limit. And then all of a sudden he had a wreck. And then he was crippled by it emotionally.
Like, this is nonfiction. I love that that we have a Ricky Bobby reference.
Ricky Bobby. You mean Ricky Bobby's not a real person? That didn't really happen?
Yes. Oh man, that is awesome. Well, I think the thing is too, with how this ties back to finance too, is like, if you think about what your end goal is, right? Is your end goal chasing returns? Because if it is, that's a sucker's bet, right? So if you're always trying to push the red line to get the most out of the, a particular stock or chasing it, you might as well just go to Vegas And I don't think it's that mindset that wins the day. I think the mindset is, hey, let's have a healthy retirement. Let's build wealth systematically, but in a way that we can calculate, and something that's realistic, because I have had people in the past come to me, and that's what they were after, and I'm not that guy. I'm not that fit, because it's not sustainable, and it's not something that's safe for a client. If it's super aggressive that you're after, that's day trading. That's day trading, and I've
trying to
seen,
time the market. You're gonna
I've just seen so
you're
many
gonna
people
lose every time
who were really good managers of their own wealth just go broke day trade.
Sure.
And it happens every day. And so I think to the point, to Jen's point about a sustainable life, it's the same thing. Risk is everywhere, but you don't have to put on a wingsuit and jump and base jump, right, in order to have a good fitness situation, right? I mean, we know people that do that. What did Mike say? Mike said something about the percentage of people that live after 6 months of doing that continuously.
That dramatically decreases.
Wasn't it like 20% survival rate?
Yes.
If you did it.
Yes.
Yeah. I mean, that's just, so the chances are it's not if, it is when.
Yeah. So you want to make sure you're managing risk appropriately on both sides, on the wellness, fitness and wellness side and diet side, and on the financial side. Now, Jeff, before we wrap it up, we have to wrap it up soon, but back to that word you used. What was it? Proprioception?
Proprioception.
Proprioception. Does that mean you can't have children, or what is that? I wasn't quite sure what that was about. That sounds a little dangerous.
Yeah. Well, Jennifer, why don't you answer that? That's more of a fitness thing, but
it's basically, I compare it to your body's internal GPS. It's the sense, it tells your brain where your limbs are in space.
Okay.
How fast you're moving, what direction you're moving, how much. Sometimes it's called body awareness.
Yeah.
Oh, sure.
You don't have to see your hand to know it's on the desk.
Right.
Or, right. But why it matters is because when you're training proprioception, if you close your eyes and try to balance on one leg, good luck.
It's really hard.
It is.
Yeah.
So
I find it hard. Eyes open, closed doesn't matter, but but it's important to be able to
I'll tell you why it's important.
Yeah.
Is if you wake up before your spouse and it's still dark out, and you have ninja skills to not wake her up, that's proprioception.
Yeah, that's what you call a happy marriage, right?
It
there.
is right.
If you have the ability of not waking up your wife or your spouse, not your wife.
I pretend that I'm Spider-Man in the morning to make coffee.
Just in the morning?
Well, when
I think you pretend you're a superhero a lot, Jeff.
Pretty
and
much.
To Jennifer and I, you are. You are. That's for sure. Hey, it's my fault. I got to wrap it up.
Oh, yeah.
Because I have to go soon. But I thought it was a great topic, and there's much more here that can be explored. So I want to encourage our listeners and viewers out there to contact you. How can they get a hold of you guys?
Fitnessfinancepro.com. And that's where you can schedule a consult with either Jeff or I or both of us.
Awesome.
Yeah.
Awesome. Well, great show today. Jeff, any final words?
Yourretirementcolor.com is where you can get your personal risk tolerance score. Go there.
It's yourretirementcolor.com.
Correct.
And that's the standard American English spelling of color, COLOR. Yeah.
Yes, color.
In case we have, you never know when a French Canadian might pop up or somebody from the UK.
Yeah.
All right.
I'll say.
All right. Or the olden times.
Yes, olden days.
When they had to throw a U in there or an E on the end of everything.
Right.
It's like, what's up with theater with an E on the end? I've never understood that one.
Yeah,
so,
makes sense.
theatre. So anyway, I digress. You guys, great show today. Thank you so much, Jeff and Jennifer. I always learn so much from you, and really great show. And listeners, make sure you tune in next week. Another great topic. and more fun, education, and hijinks from Jeff and Jennifer. That does it for today's episode of Fitness and Finance Radio with our hosts, Jeffrey Smith and Jennifer Scherer.